Good morning, everyone. It is Monday, January 10th. We're coming into some red across the markets. You can see here on the SPY, the S&P 500 futures, that we gave up that 50 here today. We rested on it on Friday. We gave it up here on the 50. You can see there's a little lower trend line right here. But then I want you to flip over and take a look at the weekly chart. There it is. And look at that. That trend line down there comes really close to that weekly 20. And if you can see here, right, that's been another area of pretty strong support for quite a while. Of course, we had this dip through it during the Delta variant freak out. But then for the most part, this 20 has been pretty strong. So keep an eye on both of those lines as we move through the day and the week, and at the end of the week we start with some bank earnings. So kicking off earnings season again. So we've got a few this week, and then we start kind of rolling into those a bit more. So keep an eye on all of that area. Sorry, I'm a little congested this morning. Keep an eye on that area as we move into the week. Okay, so let's pop back over here. We'll take a quick look at the Qs. The Qs gave up all of their major support, looking like they're coming back into a fib line and a little volume shelf here. So we'll keep an eye on that as well. If you flip this one over to the weekly, right, headed toward that 34. Oddly enough, that's been a little bit a pretty decent area as well, although we hadn't closed much below that 20. We have a few times in a while, so that's a pretty big break. We closed below it on Friday and continuing on here today. So we're going to watch this 34 and then, of course, the 50 on the weekly. Quite a ways down there, I know. Pretty painful. So if you're, it's a good time just to sit back and maybe not do very much. Here we go. There's a trend line down there that catches the, oops, that's not what I wanted to do. Okay, I have to go back and figure that out. You can see this right here, this trend line catches where we are today. So we'll see if we close somewhere around this trend line today. Maybe get a nice little push back up. We'll see. Not for right now. It's definitely a change in the tide, so to speak, especially as we look to interest rate hikes and, of course, inflation, the tapering, all of that stuff, tapering of the bond buybacks. But one thing that is interesting to keep an eye on is that these companies, these big tech companies, are doing immense buybacks. Like some of their it's just incredible, the buybacks that they're doing, and that eventually that will pay off to be good for the stock. Okay, so anyway, I don't know how I just got that up there. How do I get rid of this? Goodness. Okay, I'll have to figure that out later. Not even sure what I did to get that there. Okay, but let's go ahead and hop in and take a look at a few charts. I'm going to start off here with some of those financial names as we have those earnings coming up. And I'm going to start here with AXP. So AXP, look at this really nice move. We flagged to the side, looking for a move above either Friday's close or the high. Kind of see where we start out the day. We'll let the market settle in just a little bit, but I really like this look here, this little flagging as we go into earnings. On AXP, so even though we have earnings at the end of the month,
TLR.
I still really prefer to play out in the dates because I'm looking for that volume. We should have good volatility, so I'm looking out at March already for all of my calls, and it is the 180. Now, just because I play out to March doesn't mean anybody else has. That's just where I feel comfortable. Okay, so March AXP, I would use the low of Friday's candle as my stop on that one. Trying to keep it a little bit tighter as we start to dip down in the market. WFC, so WFC and BAC, I'm still in my BAC, by the way. WFC and BAC are particularly sensitive to interest rates. So that's why I chose this one now, because I still have BAC now, I would not likely keep all of them. I don't want 3 in the financial sector, so just to kind of throw that out there. But I really like WFC if maybe you aren't in BAC with me, or maybe you took your profits already. WFC, I like anything over the close from Friday. Again, they have earnings, so this is just going to be a couple days play into those earnings, and I like the 55s. And then finally in this area, JPM. So another beautiful bullish gap, nice little wedge here. Ooh, ooh. There we go. Nice little wedge playing out here. Like the look of that, and looking for a break to the top side of Friday's candle there. So JPM, I like the 170s. Again, these are going to be only a couple day trades at most, because I will not hold them through earnings. All right, IBM. So IBM, amazing run up, right? 2 days. This was actually in our watch list last week. 2-day pullback here, but we put in an inside candle on Friday, and that interests me. I like it here over the 8 or over the high from Friday. Actually, over the high from Friday is probably where I like it a little bit better. I find that to be a little bit more conservative, and we'll get over that point of control area. Now, they too have earnings coming up. I don't have those confirmed, but I will look those up. But this went very nice playing the top side of that candle. Again, another just few day trade, 135. Now, I know overall tech has not been doing well, but there are always a few pockets. So ON, why do I like ON? You know, I like this one on a push down toward the 50, and it's kind of pushing there this morning. If we get any kind of bounce in the tech sector, I'll be looking at this simply for a reversal trade coming back up through the candle from Friday, and I like that at the 65s. Healthcare has not done overly well here. It was doing great, and then it kind of petered out. Like the look of this chart, though, because we just started moving sideways. You know, we had this big move up. We pulled in, moving sideways, using the 34 nicely for support. Another one with earnings. Now, remember, check those earnings. You can go to earningswhispers.com and check out when earnings are. In fact, let me just go ahead and do that for you right here. So I had to look up AXP to make sure it was the 25th. IBM, let's look that one up right now. IBM, it is January the 24th after the close. If it has this little check mark, that means that it is verified. If it does not have a check mark, that means that they have not been able to verify that those earnings are going to be on that day. They're just taking a really good educated guess. So there you go, January 24th. Earningswhispers.com. Love this site. Love it, love it, love it. Okay. So ABT, anything over the close or over the high there from Friday, this would be over the close would be a little bit more aggressive of an entry, of course, and then over the high would be breaking that double top, almost triple top that we have in there, ABT 135s. CVS, I think, and WBA were doing well. Yeah, look at that, WBA, both of these. But I chose CVS here on this push off of the 20. We are just above the 3. Like that look in there. And we can draw this trend line a little bit short term, right, for a target. So we would be targeting the high there at 106.50, and then a second target just today would be about 107. So take a look at CVS. This morning it's pretty flat. It's at 104.20 right now, so pretty flat. Okay. Oh, and I like the 105s. Yep, going right in the money. And the reason I chose the 105s on that is they had a lot of, let me see. Just want to pull this right back up. A lot of open interest. You can do the 110s look pretty good as well if we open up a little bit higher. But 105, I like those right in the money, giving us a little bit of extra protection there in CVS. Okay, and then lastly, new was a great one early in the week last week. Came back in, hit support, hanging here really close to the 20. I like this for a push down and then a reversal actually on NUE. The sector keeps kind of coming back in, and this morning we do look to open below the 20. So right back here in the tail of this. So look for a bit of a push down. I would like it to kind of push, maybe touch or go through that 50 a little bit and catch it on the way back up. So this is just a reversal play here. They too have earnings coming up like everything else. I like the 120s on that. So a couple different types of plays in here. Some just earnings catalysts, some reversal type plays. So we'll keep an eye on all of those. All right, if you have any questions, Heather C at GivingTreeTrading.com. Remember, if you have cash in your account, that is a position. It's a strong position to have while we get through the choppier part of this market and start into earnings to see what those hold for us. Big disappointment on earnings could really push this market down. If we have good earnings, here's the thing. Earnings, even if they're great, seem to not be good enough. We've seen that an awful lot, that no matter how, if they beat in the top line, bottom line, and give good guidance, they might get above. It's very wishy-washy, so we have to keep that in mind. We'll look at what buybacks look like, because that will definitely help the stock. So we have to look at the big picture, but the expectations are, I would say, kind of unrealistic. They have to be completely perfect for them not to get hit. But a lot of times we see that first day of it getting hit, and then, people come back in and buy it. So we'll watch these earnings very closely, see how inflation is going to play out, especially in those that make stuff. I would assume banks probably do a little better because they're planning on those rate hikes. So a lot kind of baked in there. If you have any questions, Heather C at GivingTreeTrading.com.